Right. Hello, everyone, and welcome to the COP27 webinar we are going to be hosting today. My name is Haley Mahler. I am the head of marketing at Fallow. We are a climate tech company building a carbon exchange that allows businesses and individuals to buy, trade, retire high quality verified carbon credits. And we're building all of that with blockchain so that we can increase transparency, traceability, and efficiency of the voluntary carbon markets. Today's webinar is also supported by the Climate Collective. The Climate Collective is an innovation network supporting companies at the intersection of Web3 and climate impact. They enable trusted and liquid markets for digital environmental assets by supporting Web3 companies and founders, onboarding Web2 climate technology companies, and enabling R&D around blockchain with climate nonprofits and institutions. So I'm very excited that we're able to host this webinar today. Our team will be on the ground at COP27, and there's a lot of intrigue about what will or won't take place. So we've got some really amazing panelists for you today. We have David Antonioli, the CEO of Verra. We have Mary Grady, the Executive Director of American Carbon Registry. Charlotte Streck, the co-founder and lead consultant of Climate Focus, Pedro Moura Costa, founder and director of BV Rio, and Ricardo Bayon, who is partner and co-founder of Encourage Capital and advisor to us here at Fallow. So the group will be talking about some of the big questions in today's voluntary carbon markets, and then they'll be taking your questions. So please use the Q&A function on Zoom at the bottom of your screen to submit your questions throughout, and we'll take some of those questions towards the end of the webinar. So without further ado, it is my honor to kick it over to today's moderator, Ricardo Bayon.
Thank you, Haley. Thank you. And thank you for putting this together. I'm so thrilled to have some very good friends of mine from back in the day when carbon was just getting started. Maybe it was carbon 1.0. I have no idea what number of carbon we're in now, but it is certainly somewhere in the 4.0, 5.0, who knows. Carbon has certainly had its ups and downs, has gone through a lot of changes over the years. From the first carbon transactions in the voluntary market, which probably took place at the end of the 90s, all the way through to today. There's been an incredible evolution and incredible professionalization of the carbon markets from, the first few days of Wild West to, some incredible work done by standards such as Verra and ACR and others. The carbon market has come a long way, but I think right now, I would argue it's in one of those very pivotal moments where change can happen in a lot of different ways. And it's hard to see where the future is going to lead us in carbon, how it will interact with regulatory markets, how it will interact with, the follow-on to the Paris Convention, how it will, try and regulate itself either through a variety of integrity initiatives like the Voluntary Carbon Market Integrity Initiative or the Integrity Initiative for the Voluntary Carbon Market. It kind of sounds like a Monty Python skit, but these are important initiatives that are trying to help get this carbon market to move forward. And then you have the advent of new technologies such as Web3 and crypto, all of which are going to influence and impact this carbon market. So I think we are on a precipice and on a very important place right now in the voluntary carbon markets. And I can't think of better people than our four panelists who have, been there, done that, seen it all in the carbon markets to kind of give us both a historical perspective and a view going forward into the future. So the way I think we want to run this is talk for somewhere around 45 minutes. We may go over and then leave the rest for Q&A, but do throw in your Q&As right away whenever you want. And if we see something that's relevant, we'll definitely throw it into the mix here with the panelists. And it's going to be a conversation back and forth. So I encourage the panelists not to stand by any ceremony and to jump in and if you see something you want to talk about. But to get us going, maybe I'll turn to Charlotte to tell us a little bit about how she sees things developing at the upcoming COP in Egypt, and that's the Conference of the Parties to the Climate Convention for those who are just joining us, and how it will relate to existing voluntary carbon markets. Particular, there's an article, Article 6, which is about trading carbon amongst countries, but also has very important implications for voluntary carbon markets going forward. So if you want to just set the scene for us from your perspective, Charlotte, and anything we should think about, that would be awesome.
Of course. So you all may remember that last year in Glasgow, the Article 6 rule book was adopted by the Conference of the Party. And that is essentially, the rule book contains the modalities and procedures, as it is called in the context of the UNFCCC, to operationalize the carbon market mechanisms of the Paris Agreement, which are formulated under Article 6 and include Article 6.2, which is about cooperative approaches, and Article 6.4, which is a more centrally regulated project-based mechanism, a little bit like the CDM, but with some important differences. Now, we have a big, complicated set of procedures for Article 6, which, give countries instructions what they need to do to operationalize these Article 6 mechanisms. However, of course, this is never complete. So if you read the Paris rule book for Article 6, it contains a lot of mandates on what needs to be done at the next COP and the next COP. And in a way, international negotiations are a never-ending process of, giving tasks to the next COP. So we are never, whenever a COP is ending, it is just, before the next one is starting. So what that means for the next, COP 27 in Sharm el-Sheikh is we don't expect anything which is very political, or changes the rules of the game. We do expect a number of technical clarifications, very much in line what the negotiators have to do on the desk. And if you go to the UNFC website, you will already see the SBSTA decisions on or SBSTA texts on issues like the templates that countries should be using for Article 6.2, how the shares of proceeds should be implemented in practice, how countries should make national institutional arrangements for Article 6, how the transition from CDM activities to Article 6.4 should happen. All this is relevant for the implementation of the mechanism, but really only for the connoisseurs of these international procedures. So don't expect anything in the news about this. Now, how is that relevant to the? Should I say something on the?
Just going to push you, Charlotte, on sort of how you think it relates to the existing voluntary carbon markets, and what, in your view, are kind of the key issues that somebody interested in the voluntary carbon markets or in how they develop might want to keep an eye out on.
Yeah, so in principle, of course, anything what is decided by the COP is not applicable to the voluntary carbon market. The voluntary carbon market is governed by standards and carbon crediting mechanism like the ACR or Verra's program. So in principle, it doesn't have any jurisdictions. However, of course, it has an impact. In particular, since governments can decide to approve voluntary carbon market mechanisms most likely under Article 6.2, which is more flexible than Article 6.4, and define a cooperative approach and then approve these projects and authorize the participants that are participants in voluntary carbon market projects at the same time to be participants in Article 6.2 activities. Why does that matter? In itself, that doesn't really, matter. And I think many people that demand, countries to approve voluntary carbon market mechanism also don't really understand the implications. What they are interested in and what the discussion is about is whether or not voluntary carbon market transactions and credits are backed by corresponding adjustments. That is where the music plays, or where the controversy is, and where all the discussions are. Lots of discussion, around lots of opinions, which are not necessarily, be based, well, they're not based on experience at all, because it doesn't exist experience, and often also not on tested, facts or, analysis. It is more assumptions on what the role of the carbon market is. And there are, those that say corresponding adjustments, which are accounting units that ensure that a voluntary carbon credit is not accounted against the national determined contribution of the host country. So it takes it from the account of the host countries and allows the buyer of the voluntary carbon credit to claim that emission reduction, and nobody else claims it. Those in favor say that this increases the integrity of the carbon market, because you avoid that instance of double claiming. And those that are not in favor say, well, wait a minute, there is something about accounting for Article 6 and NDCs, which is really different from the accounting on voluntary carbon markets. And by adding these corresponding adjustments to these transactions of the voluntary carbon market, you take away something from the host countries, in most cases developing countries, what they need urgently to meet their NDCs, because they need that finance, they need that contribution. And at the same time, you create also a complication and a bureaucracy that hampers investments and hampers, voluntary carbon markets.
Yeah. So, just to sort of put a pin in that, I think this is really where the rubber hits the road at COP for the voluntary carbon markets, is this concept of the corresponding adjustments, where, say you've got a voluntary carbon project in Peru, and, you sell it to a company in the United States, should that unit be somehow taken out of the national accounts of Peru and put in the national accounts of the United States? And you summarized really well the sort of pros and cons of that. From the perspective of a kind of crediting body like Verra, David, where you are in the business of setting up standards for voluntary markets and making sure that there's no double counting and registering them and doing all those good things. How do you view the upcoming discussions at COP, and what are you worried about, or what would you like to see happen there?
Well, thank you, Ricardo, and thanks to Climate Collective for inviting me to be on this panel. I largely see it the way Charlotte laid it out, which is there's going to be no kind of real groundbreaking decisions. And I think last year was this discussion that we're referring to now about corresponding adjustment. It was a very heated discussion prior to the COP, with very different opinions on different sides of the debate. But in our view, it got resolved because the Glasgow COP essentially said, there will be no requirements for requiring corresponding adjustments under voluntary action. So in our view, that was resolved. That's kind of the law of the land for now. And we think it's the right decision. Ultimately, I think that the concern, the concern about a credit being accounted for in more than one place, meaning the host country and the company's footprint, there's a concern that you're going to disincentivize local action by governments. I don't think that that's necessarily the case, but I think it's a concern to be aware of. And I actually think that, one of the things that we're starting to see more and more is that as countries submit, revised NDCs, I'm hoping that there will be more clarity in respect of where the voluntary markets can really play a role. So the idea here really is that, countries ideally say, look, I've got 10 sectors in my economy. I'm going to take action on these 3 sectors, and I'm going to do that myself. I'm going to regulate it. I'm going to finance it myself or whatever. But these other sectors, I don't have the money. I don't have the wherewithal to do it right now. And I welcome voluntary action. So I'm hoping that there will be more clarity around that. That, of course, would simplify the process of determining regulatory surplus, which is the first question we ask when a project comes to the door. It's like, are you required by regulation? And so that will help to clarify that part of it. But I think it's really important for governments who are wanting to attract voluntary investment, voluntary carbon market investment, to be clear about that. And we're starting to see this. I'm on the steering committee of the Africa Carbon Markets Initiative, which is another acronym for you, Ricardo, for your Monty Python movie, Acme. But it's a great initiative, and it's about trying to figure out how we scale.
That one sounds like the Road Runner.
It does. So listen, I, not an E, but I did think about that too. But that initiative is about scaling carbon markets in Africa, and I think that's great. But I think there needs to be, and I'm going to add a new term to the lexicon here, not a corresponding agreement, but a corresponding commitment, right? If governments want to attract voluntary action, I would like to see that they are saying, okay, we see this is great, there's a big market, but it's not endless. And let's remember that this market is subject to supply and demand. And so if governments can say, look, we're going to take action on these sectors ourselves, but we're going to welcome investment over here, I think that could be very powerful, because it could kind of turn this whole debate about, do we need a corresponding adjustment or not? If it's very clear what governments are going to do themselves and what they're going to welcome investment in, I think that could be a very powerful message. So I don't know that that's in the cards for COP, but I think that's kind of where we want to get to. And that if I had my druthers, that's where I'd like to see come out of, maybe not this COP, but over time. I'll stop there. Thanks.
Yeah, no, I think there's a related question in there about from Roman saying, would it not be possible to solve the corresponding adjustments conundrum to simply require credit buyers to not make claims about their own compensations, carbon neutrality, but that they help countries to reach their own objectives? This would be a great achievement and to be proud already, hence an incentive for private investors to contribute. I'd love to hear your take on this, Mary, also from a crediting body who's done a ton of work in the voluntary carbon markets. What do you think both about this suggestion or about the druthers that David has going forward? Do you share them? Are you worried about anything at COP, or what would you like to see happen?
Well, first, fully agree with Charlotta and David's commentary in terms of kind of what's going to be happening in the negotiating room and the details there. Obviously, that will have a knock-on effect on our business, because we are operating in both compliance and voluntary markets, right? So we're issuing credits that can be used in a variety of different fashions, one of which is by voluntary buyers. So things that are happening, at the COP and beyond, are highly relevant to our business. But the important thing is that the recent UN report that came out concluded that even with the most recently updated NDCs, that the combined pledges are still only going to get us to 2.5 degrees. So we are not anywhere near there. And what we really need to get there is operationalization of Article 6 and getting those markets going. That's where we're going to get more impact, and we're going to get private finance involved. And what we're seeing happening at COP is kind of this playing out of countries' different strategies. They're really grappling with how to achieve their NDCs, how to attract finance. There's a lot of confusion around the interplay between Article 6 and the voluntary carbon market, how to use domestic carbon pricing regimes and all those things. So we're going to see a lot of conversation around that at COP. And the reason that that's important for us is because we're already seeing some of these Article 6 transactions playing out, but there is not a lot of clarity. So, you've got some 6.2 cooperative agreements taking place, and there's different structures for those. 6.4 mechanism is now getting rolling, and countries are looking at how they can use domestic pricing mechanisms based on, for example, a carbon tax where independent carbon credits that are generated under VERA or ACR could be used towards that tax, for example. So they're looking at all these different ways. And so this is all playing out. But what we see is obviously Article 6 is not fully operational yet. This COP is going to put into place all of these reporting templates. There's registries and databases for Article 6 and 6.4. So right now, nobody is able to fully operationalize Article 6 cooperation. So we really need this moment to incentivize continued action in the voluntary space. And those, like David said, those incentives, let's be clear about what is going to be under a domestic pricing scheme, a carbon tax, or a cap and trade, what's going to be regulated and what's not going to be regulated. And it's highly probable that countries that are putting pen to paper are going to be willing to use cooperative approaches for the low-hanging fruit, right? The stuff that it's least expensive and easiest to get for them to get done. And that for the hard to abate and expensive sectors, that's where they're really going to need investment. So we are going to see some of those strategies playing out, and a lot of discussions on the ground at COP around how countries are operationalizing this, and they're going to be learning from each other.
Yeah, no, I think you're absolutely right to keep us focused on the end goal, which is, reducing emissions and getting us to a point where we can hopefully stay below 2.5 degrees. Not, it's telling that we played superstitious up front here. I'm not usually very superstitious, but I am keeping my fingers crossed that we'll do that. And I'm not 100% sure that we'll get there, because I'm not sure that the countries have that commitment. And for me, the voluntary carbon markets have always been important, in part because they push us well beyond where the politics have allowed us to go, certainly in the past 20 years and probably in the next 20 years as well. And so I wonder, Pedro, how do we maintain that aspect of the voluntary carbon markets? How do we not, kind of throw a wrench in the works inadvertently through regulatory mandates that don't achieve what they're hoping to achieve, and also end up messing us up in lots of weird ways in the voluntary market. You've had a lot of experience in the private sector setting up businesses around carbon. How do you see this playing forward, or what would you like to see happen at COP, or what are you worried about?
Thanks, Ricardo. Yeah, I'm not superstitious, but I am worried and concerned. And basically, I think that the architecture of the carbon markets at the moment are a lot more challenging than they were in the past. In the past, the Eco-Securities days, we worked a lot only with compliance, or mainly in compliance. We nearly didn't touch the voluntary carbon markets because we thought that, that type of regulation created a lot more demand. But I'm very concerned about the Article 6, and I'll show you a graph that will save me a lot of words a bit, because it's a bit more complex. Basically, Article 6 will be a flop, and sorry about that. This is not the graph that I wanted to show, but the next one, why would it is likely it's going to be challenging, basically because unlike the Kyoto architecture, in which you had common but differentiated responsibilities, under the Paris Agreement, everybody has an NDC. So, and consequently, it is imperative that you have corresponding adjustments under Article 6. There's no doubt about that. But essentially, the result of that is that any trading usually trading is buyers buying cheaper emission reductions than what they can achieve at home, essentially kind of requiring the export of a cheap emission reduction to their country, so they save money. But in turn, the host country is left with more expensive mitigation options. And the impact, as Charlotte mentioned, it could be very negative for host countries that essentially inherit a liability. They either don't meet their targets, or they will have a very expensive way of meeting their targets. And any country that thinks about the impact of that is likely not to allow such trades. And a proxy to that is what happened in the joint implementation phase of Kyoto, the mechanism of joint implementation nearly did not trade anything, as opposed to the CDM that actually enabled a lot more trading. Let me get out of here. So consequently, we are left with the voluntary carbon markets. I think the voluntary carbon market has the potential to become the new compliance markets. But is the current architecture of the VCM viable? And frankly, and apologies for Mary and David, but I think that what we currently have is not fit for purpose. I think that the demand on it's overstretched. I mean, there's so much demand from the voluntary carbon markets at the moment that the whole architecture and processes and so on have to be rethought. I see three big problems. I mean, to start with, David actually touched on the question of well, I'll come back to that later, but I think that standards need to better reflect local and sectoral reality. And there's currently a tendency of bashing the CDM, bashing the credits, and the pursuit of a high quality that is leading the standards. The standards kind of respond to that demand, but they're becoming very niche. I mean, the amount of opportunities and situations where carbon finance can be deployed are becoming more and more constrained. And it is bad because we need to deploy climate investment at scale. Second, the processes became too long, too complex, expensive, demanding, and consequently, they are very exclusive to sophisticated developers. I don't need to extend myself on that, but Talo did a very good review of the difficulties, and I refer you to that report. Third, because the processes are complex, there is a tremendous bottleneck of execution capacity, starting with the standards themselves. I mean, you guys, David will be the first to recognize that they are overstretched, but also the validation, verification companies, and all the service providers that have to support that. People doing inventories on the field, for instance, there aren't enough of them. So how do we solve these problems, guys? Can we fix the system? Fixing it, in my view, would require revision of the standards and methodologies, remove the excesses, make them more appropriate to local and sectoral circumstances. And I'd love to follow up, David, on a conversation on the question of regulatory surplus as opposed to common practices, because the realities in many countries do not correspond to regulation, right? The second thing is adjust expectations. I mean, this pursuit of high quality is basically using a 20-80 approach as opposed to an 80-20. There are always going to be things that are not perfect, but perfection, in my view, perfection is the enemy of the climate. The third thing is in this process is that, all the processes there are from the last century, really. We need modern processes of project development, validation, registration, monitoring and verification, adopting digital questionnaires, big data, remote sensing, machine learning, et cetera, et cetera. I mean, currently, and the Talo report shows that it's taken between 2 and 6 years for the process of beginning development of a project all the way to having credits issued. That is not good. Every year that passes, that climate finance is not flowing is bad for the climate. And so, okay, instead, if we can't fix that, and a lot of people don't think that it can be fixed, but I'm sure that David, that Mary, someone have ideas of how to fix it, and that will be an interesting debate. But if we can't, we should, irrespective of that, we should be looking for alternative approaches. We should be thinking out of the box. We should be thinking about large-scale programs as opposed to projects. And I refer back to the Costa Rican national program that was launched in 1996. To date, I have not seen something that is so well-defined and so powerful than that project. Can we look at these old examples? We should be thinking of climate as opposed to carbon finance. I mean, carbon finance is too constrained by these methodologies and all these issues that we've been dealing with them since 1991 in my case, but they sometimes are constraining. If we think of climate finance more broadly, I think we kind of become a bit more free to do different things. In my view, we should be thinking about the adopt an NDC approach. I mean, I saw some complaint, some criticism in the chat already, but there was a lot in the market at the moment about the Gabon approach. Frankly, I think it's a good idea, but we should, are there flaws? There may be flaws. Can we improve on them? Perhaps we can improve on them, and so that we make these large-scale approaches better. A bit like the Amazon Fund and the way that the Norwegians supported Brazil in really achieving tremendous reduction at the time. In fact, I was watching TV in a moment because Bolsonaro canceled the Amazon Fund, and the Supreme Court now is just about to reauthorize it. And finally, the last point with relation to this adopt NDC or support an NDC approach, which is really what the voluntary carbon market should be doing. The latest initiative on that I saw just this week, 3 days ago, Uruguay launched an NDC-PEG bond. Fantastic initiative. I mean, raise bonds in international markets so that you have the capital to implement the laws that you passed. And many laws, talking about regulatory surplus, David, laws are proposed because the lawmakers get carried away of being green, but sometimes their financial people don't give them the funding to implement that. That's where voluntary carbon markets can chip in, help countries meet their NDCs, and all these out-of-the-boxes approaches should be taken more seriously rather than kind of dismissing them because they don't feel fit, in my view, an old-fashioned box. I'll stop there. Thanks, guys.
Thank you,
Can I
Pedro.
comment on that?
Yeah, absolutely, Charlotte. I'll put you up first, but I'm sure David and Mary also want to comment on this. I think Pedro's kind of thrown the gauntlet out there. I'd say that there is a couple of things to be concerned of going that in some of those routes at least, and that is that we are also, as carbon enters this new era where a lot more interest in carbon is out there, there's a lot more people taking shots as carbon sticks its head out of the parapet. And I'll just mention the John Oliver report that was here in the US about how carbon is all BS and no additionality, and we shouldn't even have voluntary carbon markets. So how do you go a route that is better, faster, more efficient without kind of losing public trust and public commitment on it? And I think those are kind of two ends of the same spectrum. But go ahead, Charlotte, and then I'll turn it to either Mary or David, whoever wants to go first, before letting you come back.
Yeah,
Pedro.
I want to go, the two aspects of high integrity and high quality, which is what everybody is concerned. First, one last point on the corresponding adjustments, because sometimes it is being portrayed as if corresponding adjustments make a credit a better credit. And that is not necessarily the case, because the value of the corresponding adjustments depends on the ambition of the NDC. So if there is a very inflated, non-ambitious NDC of a country, these corresponding adjustments can be made at very little cost for the host country. While if we have a very ambitious NDC, it is coming at a very high cost. So just for those that are equally old as us here on this panel, if you remember the old Kyoto Protocol time when we had enormous surplus of assigned amount units in Russia, buying these assigned amount units in Russia as defined units didn't lead to any additional mitigation at all. And similarly, we have it here. If we have a non-ambitious NDC, the corresponding adjustment is not adding value to the credit, to the voluntary carbon credit. And I think that's important because we do not want to punish countries that are more ambitious in their NDC formulation, because then we create a perverse incentive. And I think that's a point that needs to be considered. Another one is, I love, Pedro, and I'm, a totally incredibly pragmatic person, which, for Germans is not very often the case, but I am. But even for me, pragmatism had limits. And if we now make everything a carbon credit, there are corporates that take these carbon credits and offset emissions, we don't do ourselves a favor. I think we need to draw the line between increasing flexibility, making sure that a lot of money flows into mitigation action, but we are defining the guardrails for what can be used as an offset, because that's the problem. The problem is not, financing mitigation, and I'm all for flexibility there, but taking the carbon credit and then selling a product or a service as carbon neutral, and that is linked to a carbon credit that is not a real and additional emission reduction, is problematic. So these were my points.
Ricardo, David, if you allow me just to jump in here, because that referred to, it appears that I was proposing that everything counts, which is not the case. This kind of refers to the concept of an offset, right? Is an offset a permission to emit? If it is, so then yes, we do need to be a lot more selective in what enables others, and in fact, a corresponding adjustment is the ultimate permission to emit, right? And that's why I made a plead for adopt an NDC. Think of climate finance as opposed to carbon offset crediting, because if those are permissions to emit as opposed to voluntary support for countries to implement laws that they love to implement but don't have the funding, then we are in a different ballgame. I think that the offset discussion has been too restrictive on what we can promote, what we can look forward to, but just
yeah, no, I think, Pedro, I think it's a really important gauntlet you've thrown down, but I do think there are some nuances there, or that Charlotte has begun to elucidate. I don't think anybody here thinks you believe that everything should be included, but I do think that there is that danger that Charlotte alluded. And I'll turn it over to David and then Mary, but before that, let's also talk about the broader initiatives beyond COP. Let's talk about the VCMI and the ICVCM. And just for those of you who are not following the acronym SOUP, NDCs are nationally determined contributions. They're the plans that governments come up with under the Framework Convention on Climate Change, for those of you on the acronym watch. Go ahead, David.
Yeah, well, I'll introduce some of them. So which thread to pull on this conversation? Because there's so many, right? And I'll try to limit myself to one. And it goes a little bit to Pedro's point about the fact that we are in this world where integrity is everything, right? And everybody's really kind of obsessed with integrity. And I actually think that this is causing everything to gear up to a level which may not be that productive. And I'll give you the example of the ICVCM, the Integrity Council for Voluntary Carbon Markets. When it was first launched as the Task Force for Scaling Voluntary Carbon Markets, there was a lot of statements, deploring the shoddy quality of credits in the market. And there was even some allegations that there was fraud all over the place, which really weren't true at all. But it set the course, the train in motion, to have everybody be hyper vigilant about integrity. I believe that while there were some integrity issues that need to be addressed, the biggest challenge that the voluntary market faces is one of confusion, right? People have no idea how they can compare a VCU issued by us versus an ERT issued by ACR or a gold standard unit. And people need to have that confidence that actually, generally speaking, we pretty much follow the same types of rules and procedures, and we're all good. But there's not that level of confidence. And I think that's been one of the real missing pieces in the discussion. And as you will have seen, the draft carbon credit principles, core carbon principles, and the assessment framework was this incredibly heavy and very cumbersome approach to assess quality across the credits, across the market, which I think was a bit unfortunate. We'll see where it comes out. Full disclosure, I sit on the board of the ICVCM. I'm the representative of the supply side of the market. But we think that there's can be some real improvements. But if we can help to educate and provide a framework that allows people to have confidence in the standards that pass the test. There's got to be a test, there's got to be some oversight. We welcome that tremendously, but it's got to be pragmatic and it's got to be thoughtful. And if we can achieve that, then that's going to set the stage for scaling the voluntary market. The other kind of piece of the thread that I did want to come back to was that this integrity is important, because in the end of the day, corporates are investing in this because they perceive that there's some sort of liability. Now, it's not on their books necessarily, but there's kind of this expectation that you've got to measure your footprint. And once you measure that, you got to do something about it. Ideally, it leads you to reduced emissions internally, but then if you can offset the rest, that's great. That's exactly the sweet spot that we want. But there's that perception that you're getting something from this investment that allows you to compensate for emissions, which is very valuable. And I don't think we want to kind of risk throwing that away, because that's really, I think, was what driving this part of the market.
Yeah, careful throwing the baby out with the bathwater. Mary, you want to add on to this? I saw your hand was up.
Yeah, well, gosh, there were so many pieces that now I don't really know where my comments should land, but I guess I could just build on what David was saying. And when that task force for scaling voluntary carbon markets was originally established, the goal really was to scale the market. And the idea of integrity and quality of credits themselves was but a tiny piece of the discussion. There was talk about how to digitize verification, MRV across the board, standardized contracts, right? So it was both scaling up the supply and the demand, and being able to do that in a thoughtful way. And somehow it kind of veered off to where it is today. And I do think we have to be really careful of the perfect being the enemy of the climate. I loved that, Pedro. And figure out a way to in a timely fashion help the market gain confidence in the things that are happening that really are good. There's billions of dollars being channeled, and the idea that corporates could make a contribution claim to an NDC is a laudable idea, but corporates really do want to make other claims. And so they want to make claims about what they're doing beyond their value chain, et cetera. So we may get there eventually, but that's really not where we are now. And this surge that we're seeing in corporate interest is coming from the idea of wanting to make investments in things that they can point to and be able to make claims, internal claims, product claims, et cetera. So that VCMI guidance in terms of what claims can be made and what's not considered greenwashing is really, really important. And I think, going back to the John Oliver show, the positive indicators of that show is that this is a mainstream HBO show that did a piece on carbon markets, right? So that just goes to show you there's huge momentum in the space. And as a kind of a strange result, our phone was literally ringing off the hook afterwards. So it was a really hard piece to swallow, but at the same time, people were like, "Hey, wow, this market stuff is the real deal." The other thing that came out that I thought was really positive was a really coherent and aligned response from the carbon community about where that piece missed the mark. And one of the biggest ways it missed the mark was by criticizing companies that are trying to take action. I mean, poor KitKat, right? Here's KitKat trying to do good stuff, and they're getting slammed on John Oliver. So there's this recent report by South Pole that talks about this phenomenon called green hushing. And green hushing is that corporates don't want to talk about their commitments or their progress. Why is that? Because they don't want to end up on the John Oliver show. We need more corporate action. We need companies to be talking about what they're doing. We need investments in this space. So, to that extent, I think that the points he made on his show were really not helpful. And we definitely, if you're a C-suite executive right now, it's a lot easier to do nothing, right? And so we want that trend to be the opposite. We want corporates to be stepping up. We're not going to meet the 1.5 degree target with countries alone. We need everybody on board, all sectors, private sector, corporations, and everybody. So carbon markets have an important role to play in that. We do need integrity, but we also can't let the perfect be the enemy of the climate.
Yeah, before we jump into questions, and yes, Pedro, I'll definitely let you respond to all this, but I do think that there is an aspect of what Pedro said that we haven't really delved into, and that is this question of the slowness and the bottlenecks, and at what point are we trying to find the perfect without allowing more of these projects that are probably good enough to get through. Maybe some thoughts from you, Mary and David, on ways, and Charlotte, if you have any, on ways to make this process more effective and better and get rid of some of those bottlenecks. Because the Thaler report I also thought was really quite good in the sense of saying, yeah, there's some issues with the crediting bodies, but there's also some real issues with verification and verifying bodies that not enough of them, not moving quickly enough, not enough capacity on the ground to do that kind of verification. So how do we think outside the box? And also it would be great, before we jump into questions, to jump into some thoughts on a potential blockchain future for carbon and what that looks like. So any thoughts from anybody on that would be great too. I don't know, Mary, do you want to take a first shot at this, and then David?
Sure,
and then
yeah. Well, what we're lucky that we're in a place now where we weren't 5 or 10 years ago. The technology development has been astounding, and the technology companies, and the convergence with the interest in carbon markets is happening. So we have a great opportunity to build on that, and we're getting several phone calls a day of companies that want to partner with us to help digitize the MRV process, to tokenize and democratize the access to carbon. And we are, in the process of investigating all of these options now, so that we can streamline both the MRV side of things, including how do we digitize the verification, where do we get live feed data streams right into the process. And we can't remove the human element, but there are lots of technologies at our disposal today to help to streamline the process and accelerate the project cycle.
Mm-hmm. David, any thoughts on that?
Yeah, so first of all, I think we take on board the fact that, there's been quite a bit of challenges with getting through the projects. And, we're trying to solve that. But I would just be careful not to throw the baby out with the water immediately, because I think that the reality, seen from our perspective, is that there's this huge growth in demand, right? So loads of more projects coming through the door. So of course that, increases the volume of work, which, we weren't prepared for. Then we've been building up and we're getting there, but we're not there yet. But because of this increased volume of work, what we've seen is that the quality of the documentation has fallen significantly, even from developers who are, have gone through this time again, but they're getting pressure. They're trying to grab projects, so they're putting stuff through the system. And because we don't have the requisite or the needed BVV capacity, guess who ends up having to clean things up? It's my staff, it's Mary's staff, and it's challenging. We're the bad guys in the movie, right? Because we're the ones who push back, and maybe sometimes after some time. And I get that. That's just the reality of what we're facing today. But we're also seeing new developers and people who are trying on new things, completely new things. So we do have to be vigilant, and I believe we're doing our job, but it's painful and it will require a transition. Now, that's not to say that we can't do better, and that we don't need to look at new technology. So, all the idea about putting things on a electronic platform, absolutely, we should be doing that. And I'm sure that every single standard, around the table and beyond are thinking about how we actually digitalize everything from the project development process, which means putting the methodologies in an accessible platform that's more readily available via online portal, to the actual MRV, and eventually to the issuance of the credits and the eventual trading, and that's kind of gets into the blockchain piece. So I think that there is going to be an adjustment to get there. Now, maybe some of us won't make it, right? Maybe some of us will just end up not being able to deal with the crush, and that's just part of life, and we move on. Certainly we at Verra, we're committed to doing this, but it will take a little bit of time until we can get the staff. One thing that we haven't really talked about is staffing, right? Where do you find the carbon accounting expertise that the market needs right now. There's a lot of people wanting to buy credits, a lot of people wanting to develop projects, but we don't have the cadre of staffing that we need, and everybody's being picked off by a developer or somebody else. So, now we're kind of in this real fight for talent, which is the reality of our sector. And that's just, again, life, and some of us will succeed, some of us may not, but we'll get there. And so that's all really just to say that I would be careful about, writing the tombstone about standards and the system not working. I think it's a growing pain that we're going through, and we need to get there, and we're diligent in working on that. But I think it's an important perspective to keep in mind.
Yeah, no,
Yeah.
it does feel like there is pressure on crediting bodies such as yours from two sides, right? On the one side, you have the decentralization pressure of Web3 saying it all needs to be decentralized. We need these mechanisms, blockchain, interchain, all these things. And on the other side, you're getting pressure from the other, the more centralized aspect of this, of VCMI, ICVCM, sort of saying, well, we need an uber crediting body to oversee all the crediting bodies and set overall integrity standards. And it does feel like you guys are being pulled between a rock and a hard place, to mix my metaphors. But I'd love to hear thoughts from anybody on sort of that Web3 future. I know Charlotte had her hand up, and then Pedro. So Charlotte, then Pedro.
Yeah, no, and so I appreciate, and I'm super happy that all these new people come to the market and that lots of people see an opportunity. But, I also want, there is a lot is being offered where I feel there's a solution in search of a problem. Because yes, of course we can do a lot better by monitoring trees, by using tech applications. But honestly, as somebody who is involved in nature-based solution projects, the monitoring never was my main problem. That's my main problem is to building year-long trust with indigenous communities. My problem is to aggregating farmer organization. My problem is dealing with weak land titles. My problem is dealing with violence and the absence of institutions. And these are real challenges, and the absence of law enforcement, what Pedro mentioned. So we need to, people need to be aware that these problems and this mitigation cannot be achieved from London, New York, or Berlin. What we need is people in the countries, not in the capitals of these countries, on the ground, and doing the hard work to develop these projects. And I think that's, at the moment, we have a lot of discussions and investments and, ideas of people that are insufficiently aware on how complex it is to achieve these emission reductions on the ground. And yes, once I'm there, I'm very happy to use a tool to count my trees. but it's not my primary problem.
Can I
Go
chip
ahead.
in, yeah, Ricardo? And I entirely agree with you, Charlotte. I mean, this is the role of the developer. The developer is the one going to the field, bringing people together, assembling kind of social constructs that result in emission reductions or sequestration. And their job should not be navigating kind of 300-page long project documents full of kind of mathematical equations. So again, I really welcome David's suggestion that they are working, or the statement that they are working on that, because frankly, you should go there, pass a mouse on where you are, and that, and then grab existing off-the-shelf kind of satellite imagery, biomass quantification. The calculations of emission reduction should be in inbuilt kind of models there, that you don't need to be a mathematician, a geographic information system specialist, et cetera, et cetera. You should be on the ground engaging the people that you talked about it. So this is where I think that modernization should come for. Not, by the way, on tokenization of blockchains, because blockchain is just a means to keep information in, right? So that's not going to substitute the intelligence of people either developing things on the ground or the systems that David and Mary have in their standards. I really refute that. Coming back to the question of intent, but that's one side of things. The other problem that David has, which Ricardo alluded to, is exactly this. You mentioned this American kind of interviewer, I'm not familiar with him, but it's what we call the Daily Mail syndrome. I mean, someone comes with something saying that all offsets are bad, and David has to respond to that, and we end up with a very just kind of making it more and more untenable and niche. I agree with David. I think that the bash the offset syndrome is what we as a group should be also countering and saying, no, this is not right. I mean, those offsets are mostly very good quality. Of course, in any sector, there is fraud. Do we mean that, oh, the financial sector is very bad because there's a lot of fraud? No, the financial sector oils the wheel of civilization for a long time. And there are the bad ones that should be expelled, and there's the good ones as well. And finally, with relation to, that doesn't mean that I reject integrity. And for disclosure as well, I am in the board of the VCMI, the Voluntary Carbon Markets Integrity Initiative. I mean, but we need, however, to define what we mean by integrity. Integrity doesn't mean making it things more and more difficult and niche. It means something that really has an impact on the environment and help us in the trajectory to a net zero world.
Great. Thank you, Pedro. Mary, you had your hand up, and then after that, just be thinking. I'm going to ask you for like a really quick 1 sentence or 2 sentence explanation or vision of how you see blockchain affecting the sector going forward. So go ahead, Mary.
I just was going to answer one of the questions that was in the chat live, which is about the ratings agencies.
Yeah.
And, you know, we're seeing a new ratings agency pop up every day. They have their own proprietary ways that they're doing evaluations. And what I can say, we can just point to, you know, David's description of what's happening in the market. It takes very specialized expertise to be able to understand projects, all of the dimensions of these projects. And the notion that somebody can go out and hire 80 people that are then the next day rating projects is frankly absurd, right? That they just don't have the expertise. My ACR staff, we have 6 professional foresters on our staff, right? That are overseeing forestry projects, and the ratings agencies don't have anybody that has that expertise. So it's something in the market because, you know, corporates are looking for a way to understand that what they're purchasing is high quality, but I'm not sure that that's really helping or just adding to the confusion.
Yeah, no, but at the same time, there is this push for decentralization of everything and more, you know, standard setting bodies, and many are popping up. And then we didn't even get to talking about, you know, some of the buyers clubs like Corsia helping to set standards in one way, shape, or form. But there is a bit of an atomization, hence the push for more centralization, hence the push on the other side for more decentralization. As I said, we're in a very pivotal moment in the carbon markets when it can go any which way, including, you know, disappearance of some of good things that are happening out there. So very timely talk. And I recognize that we wanted to leave some time to answer the questions that are being put to us. And we have 17 open so far, so quite a few. But I did want to get thoughts on kind of, you know, Pedro has sort of given a little bit of his thoughts on tokenization and blockchain, but I'd love to hear from others. You know, where do you think this is going? Is this going to be helpful? How is it going to be helpful? And, you know, try and keep it at a sentence or two if possible. I know that's harder. What was it? Mark Twain said, I didn't have time to write you a short message. Yeah. You want to kick it off, Mary, since you've got the podium?
So, you know, obviously the blockchain infrastructure has a role to play. And one of the things that we're seeing that we think is a really positive development is the idea of this meta registry that's being developed by the World Bank. This is a place where everybody can plug in. So it's a centralized place where you can see real time what's happening on the ground. If you're a government, you can see what projects are there, what the status of the credits is. You can link that to your own registry for your accounting. So that specific application of blockchain is already happening and is really promising in terms of transparency.
Mm-hmm. That's the climate warehouse that they're setting up. Is that what you're referring to?
Yeah, it's now called something else.
Yeah.
which I
The
will-
worst name. Yeah.
Yeah, it's now called something else. So.
And I think they had settled on using Chia as the kind of blockchain for that, right? Which is interesting in and of itself. I don't know.
I'm not sure that that's going to be the only partner, but that's their initial partner. Yes.
David, do you go next?
Yeah, I mean, I think blockchain has a role to play. It's, obviously great new technology. I think people put it out there as the panacea. It's going to solve all our problems. Put everything on blockchain, everything's done. And I have a story about this at one of the COPs where there was a hackathon. And the guys from Hackathon won because they had this great blockchain solution for Red. And they came to me and said, "Hey, we won the hackathon and we got the solution for it. We need to figure out how to do it." I said, "Well, what are you gonna do?" So it's really simple. You get your phone, and somebody on the ground will just take a picture of the forest. And if it's still standing, they just upload it. And then it gets messaged back into the developer and the buyer, and boom, they can actually receive a payment right there. And it was like, whoa, hang on a bit, dude. It's a lot more complicated than that, right? So, again, it's put out as kind of being the all solution. There's got to be, I think it's a great technology, that Web3, everything, digitalizing things, we've got to do it. There's no doubt. I think we are, as Pedro mentioned, still a bit, far behind in terms of our systems, and we have to, get up to speed. But it's not like we just need to kind of all of a sudden whole hog adopt new technologies because they're there. We need to make sure that we're thoughtful about when, where, and how we do that. In fact, we just concluded a consultation on, what do we do with crypto? And so there's a lot of thinking into that. And, I know that that's frustrating for a lot of people, because a lot of people, particularly folks from the tech space, they've got the technology, they're ready to go, they move very fast, but there are some pretty serious implications, at least with crypto. The implications that we need to deal with are, well, who's going to allow it to be traded on this stuff, right? Yeah, the idea is democratize it to everybody, but we know that in the past, what has happened with carbon credits and the concept is that people have gone to pensioners and said, "Hey, you've heard about this climate change things, right? Oh, you know, for carbon credits. Hey, they're a great investment." And they fleeced people out of their lifetime savings. So, it's not so easy as some people make it out to be. And we do need to be careful about how we use these new technologies to make sure we don't step into something that could be really bad.
And you mentioned your consultation. What are the next steps, and when are you guys gonna come up with some ideas of where you're headed on this?
That is a great question that I cannot answer yet. I don't know. I have a briefing from my team later on next week, prior to COP. So I should have some better answers. I'm sorry, I don't have the latest, greatest, but we are thinking about it.
Yeah, no worries. I mean, I do know that your decision and ACR's decision to sort of, pause things as you thought about crypto caused a certain amount of ruckus in terms of like, oh, what's going to happen to, all the different blockchain systems. But I think it was a really good decision in the sense of saying, hold on. There are better ways to do this than the way it's being done now, and let's think of those better ways and let's use those better ways. So now the ball's in your court to make it quick and make some decisions quick on how to go forward, because there's a lot of people waiting. Okay, Pedro, you go next.
Well,
And then
just to follow on point on what David said. I mean, offsets as an investment class, then we are getting to a lot more dangers here. Your John Oliver kind of bash on offsets. Now, we have to be very careful about kind of offering offsets to retail, because people like you and I, David, that have been here for yonks and have seen how these things perform or non-perform, or the volatility and the prices of carbon credits that go from 33 euros to 1 cent. You don't want a pensioner buying that, right? Based on excited promises in a moment of kind of, of enthusiasm. So that's a different ballgame.
Yeah, at the same time, you don't want to prevent retail from having a good, easy way for buying carbon credits, as a way of supporting the work that's being done. So, there's pushes in both.
Yeah,
directions.
but not as an investment class, Ricardo. I mean, there's a,
No,
tick
not saying
box
an
you can
investment
buy
class.
carbon neutral in your, that's fine, but invest on that, that will require so much, it will require regulation to start with.
And we didn't even talk about the regulation that's coming with SEC disclosure regulations, CFTC getting involved in carbon, various government entities, both in Europe and the US and elsewhere, talking about carbon. But all right, Charlotte, you have the last word.
And I admit I didn't pay all attention because I was typing answers into the into the chat. So what I wanted to say is I just wanted to make a case for transparency. We need, transparency is a condition for a lot of, things around quality and accountability. And what we discussed here, from in the last hour, whether it relates to corporate claims and the use of offset, whether it relates to what is behind a certain corresponding adjustment, what is the assumption of carbon credit rating agencies, what is it, what they rate there, but also, with respect to communication on project. As somebody who has developed or has worked on a standard trying to assess the SDG contributions of carbon project, I can say that often the information is very poor, and it's very hard to verify or check what project developers claim. So yes, and wherever technology can help to improve the monitoring systems, technology will not create a good project, but it will help with the transparency and will help to, support all these different, market players, market mechanisms to make sure that there is, that buyers know what they're buying, that consumers know what they're getting when they buy something carbon neutral. And then investors also know what the carbon credit is that they are investing in.
Yeah. Thank you. Any thoughts on that respect, Charlotte, about crypto and where you see that heading? Or do you want to take any pot shots there?
No, and I'm not qualified to, I'm probably not the best one. I think it can be useful. Again, it helps also making flow of information, more efficient. I think it can help on payment systems where you have, again, so I'm more thinking about the solutions on the ground, on financial inclusion and payment systems, and where you involve a lot of farmers. So it has a lot of potential also in the implementation of projects, but I'm by no means, an expert there.
Great. Well, we'll start off with a softball in the questions. Nisha says, what is one thing that will make your jobs easier? Who wants to go with that one?
I'll go. Harry Potter's wand. That would help me out. No, I think
Who's
Russ-
Dumbledore in this scenario? Who's Dumbledore?
Oh, well, that's right, because the wand eventually was, well, you'll hear about it. We won't get into
Each of
Harry
us
Potter
have a
trivia.
different
My daughter is
Dumbledore, right?
obsessed with Harry Potter, so I now know everything about Harry Potter. But I think one thing that we think is really important is the talent. If we could wave our wand and say, we have more talent to staff, ourselves, staff the auditors, and staff the developers, I think that would go a long way in helping to resolve a lot of things.
Great. Unless anybody else wants to go, an anonymous attendee says, coming back to quality, if we are making trade-offs when it comes to detailed accounting of carbon credits, i.e. difference between gold standard and Verra cook stove methodologies, what should it be traded off with for it to be responsible? So more on the quality side, kind of like what do we what are we talking about? Are we talking about these Uber standards from bodies like ICVCM? And I know, David, you pointed out that you weren't particularly thrilled with where that was ending up, but do you see that going?
Well, let me be clear. I wasn't thrilled with kind of what the consultation came out with, but I still believe in the concept. I think that the ICVCM has the potential to create, call it an Uber standard, but I hesitate to use the word standard because I think that's precisely the problem or the trap that the ICVCM has fallen into, that they basically said, oh, let's just create a whole new standard. And that's highly problematic for a number of reasons. Namely, one is just timing, right? So, but I think that the ICVCM can set what I would call a threshold of quality. And I think that is going to be important, especially as we're starting to see now in the market, a lot more standards. Now, if you put, the gold standard in ACR, in Vera, and the Climate Action Reserve side by side, like I said before, pretty much we follow the same general procedures. And I think that's where you want to land. I mean, yeah, it's fine for someone to look at that, but I think you'd agree, or if someone did that analysis, you'd see that those kinds of procedures are really important. I think another really critical thing is governance. I continue to believe that us being nonprofits is a really critical element, and it allowed us to make the decision to no longer credit renewable energy projects. If we were a private sector entity, we probably would not have made that decision. And we need to have the ability to do the right thing for the mission, for the climate, without having to think about, oh, what's this going to do to our bottom line? So I think that there is a role for someone like the ICVCM to set a threshold level of quality that's backed up by proper governance. And I think if we can get there, we can address the confusion element that's plaguing the market now and get to a point where people will have confidence. And you don't necessarily have to do a trade-off per se. You can choose different standards and different credits, but you'll understand that there's a basic level of quality. One of the things that the ICVCM is thinking about is that if once you establish that, maybe there's things that you want to trade, kind of how oil trades, where you have a basic commodity like Brent crude, but then on the basis of that base price, people trade other crude oil. That's how to use that example, since we're talking about climate change, but it's a good market example of how commodities get traded on basis points above a basic threshold to reflect other things that people might want. And I think that would be a great thing to be able to achieve, and it will allow the scaling of the market.
Maybe
Yeah,
corn yellow number 6 is a better analogy if we want to stay away. Yeah, go ahead, Mary.
Yeah, I think we're not going to see this kind of single standard. What we're seeing is harmonization, right? And we're seeing that harmonization occurring on the basis of the Paris Agreement itself, which is a bottom-up approach. Countries aren't all doing their inventories the same way, right? But there are thresholds of how things need to be done. So it doesn't really matter if you have a cook stove project that's generating 20 credits or 23 credits, right? That's kind of lost in the noise. What you want to know is that you have the procedures are clear, all of the other pieces are in place, the governance is there, et cetera. And that harmonization, I think, what the ICVCM is trying to achieve, again, it's a good thing, but what they really should be doing is building on systems like ICAO. I mean, ICAO spent, starting in 2018, they spent almost 2 years doing a road test of their emissions unit criteria to figure out where to set the bar. And then, standards started applying. There have been, they have their 19-member technical advisory body that has a very clear mandate and governance structure. So you know what you're going into. And there's been 24 different programs that have applied, and only 8 have been approved. So that shows that there is a level of rigor that's being applied to the process in terms of what they're letting get through the gate for quality. And ICVCM really should be building on that process. Maybe it needs some tweaks, maybe we're learning, but a lot of the pieces of the puzzle in terms of the governance, the verification, the avoidance of double counting, the programs that have been through the ICAO approval process, definitely already, check the box on a lot of the work that the ICVCM is trying to do and shouldn't be redoing.
And ICAO, again, on the acronym side, is International Civil Aviation Organization, and they created a sort of carbon offsets approach called CORSIA, which I think is what Mary is referring to. Charlotte, do you want to go next?
Yeah, and I just wanted to just say that we should also not, we haven't talked about the governments at this moment, you know, and in particular in developing countries, but I also must say also here in the country where I'm at the moment, in Germany, nobody in the government really understands the complexity of this market and that we talk about. And as somebody who is also doing a lot of capacity building, I must say it is increasingly difficult to explain to governments, you know, what we are talking about here. It's so esoteric. You know, we have a counterfactual commodity that we create with standards, and then we have all these on the top processes, and then we link it to Article 6, and then we ask for corresponding adjustments. It's so, okay, it's good. Climate Focus had a lot of work because I earn my money explaining it to people, and it gets always more complicated. But it's very frustrating from the point of view of the efficiency of enabling mitigation action. And as you know, somebody said, you know, the one thing that would make my life easier, I think if there was a recognition of all these, you know, initiatives, but also of countries, you know, into development organizations, how much more needs to be invested into the support of developing countries and making sure that they can build the programs and support the investments and welcome the investments and effectively be part of this discussion, because that's at the moment not happening. And that we see many capacity building programs now on Article 6, but these Article 6 capacity building programs fail to, you know, draw the line or explain how this relates to the voluntary carbon market and to the request of all these, you know, corporates that knock at the door of these governments and want to, you know, a letter signed on corresponding adjustments. So I'm just, this is probably here not the forum, but it's one of the things that we need to keep in mind. This is happening in the context of mitigation planning and regulation of countries.
Mm-hmm. Yeah, no, I think we share your frustration and worry in the sense that, you know, as these things get more complicated, what is actually happening on the climate front? You know, I do think that VCMI, for instance, has pushed us in the right direction in the sense of saying, hey, first, or at least at the same time as you buy offsets, you need to reduce emissions. That's key and important. And, you know, we used to call it the mitigation hierarchy, where first you avoid emitting whatever you can't avoid, then you reduce whatever you can't reduce, that's what you offset. And, you know, I think now we're saying we got to do it all kind of at the same time because time is running out. And I think, but pointing out that the need for those reductions is important. I think the same applies, honestly, for governments and the way governments react to these things. Like, you got to push as hard as you goddamn can to reduce those emissions. I also wonder, on a previous point that David was talking about and Mary also alluded to, is, you know, are we heading towards a world where there's kind of like a SWIFT for carbon? You know, every country has their own currency and their own systems and how you transact in them digitally. And then, you know, we have SWIFT-like mechanisms that allow transactions between countries and between financial institutions. Are we going to see the same with carbon credits down the line? And is that what used to the artist formerly known as the climate warehouse, or is that something else? But David, you wanted to jump in before that.
I had a different comment, but on that question, I don't know if that's where it will go. I mean, I hear in the back of my brain the constant question, hey, you've got to do this, but you've got to, like, you know, make it different for our country. And we hear that all the time. And the reality, at least until now, has been that doing that unique adjustment often doesn't make sense and isn't going to add value and is actually going to create a different kind of unit that's not going to be valued. So our view and to that, our answer to that question until now has been, we think that it's best to have something that applies across the board. Maybe there's some cases where Pedro is saying, that there's kind of unique circumstances that you need to take account of. Certainly willing to hear those out, but until now, I haven't seen any real compelling evidence that says that you need to kind of create these differentiated rules across different jurisdictions, which I think does suggest, but I think it's not going to be something. So here, I'll take a crack at your question. I don't know that it will be an individualized type of credit per country, but I think it could be what we're seem to be building in the voluntary market, that it would be a differentiated carbon credit based on the approach, the standard, if you will, but that has a level of understanding, which again is the purpose of the ICBCM.
Hmm.
And I welcome the SWIFT thing, Ricardo, because in the end of the day, I think we want variety. We want different approaches. I mean, who knows everything, right? So we all testing. David doesn't credit renewables. Gold Standard doesn't credit red. So you have to have this diversity, and the same will be happening at the convention as well. There's 7 countries out there. All of them have to be reducing their emissions. Some of them more perfect than others. But we will need to include and engage and promote all of them. So yeah, again, I go back to let's not aim for the perfection, but let's be a bit more pragmatic than I think the sector currently is trying to be.
Yeah. I was going to make some joke about, pragmatism from a Brazilian and push on less pragmatism from a German, but, hey, let's not push country stereotypes any further than they need to go. We have an interesting question there about biodiversity. Why haven't we seen biodiversity markets scale? I know this is a little tangential to climate and carbon, but not that much. Any thoughts on that question?
Well, just one quick comment. I always thought that the Climate Convention and the Biodiversity Commission were all out, and in fact, Kyoto excluded land use projects when in fact, if it had included, Kyoto could have subsidized the Biodiversity Convention. And I think we should be thinking more intelligently about linking the two of them.
Mm-hmm.
Yeah, amen. Yeah, so there's, biodiversity has been, actually, this is interesting because there's a good piece here that relates to carbon. Obviously, many carbon projects have this biodiversity benefit, but what we're starting to see now is that there are many projects or areas, for example, that have been actually, stewarded properly for generations. But those folks are now saying, hang on a bit, I've been doing the right thing for years, and how come I can't support my community in the long term by accessing the carbon market? So this is one of the dynamics that we're seeing, that people are saying, hey, I want to get carbon credits. In fact, someone at last year's COP said, hey, you know what we need? We need the Indigenous Peoples REDD framework. And I said, why? Well, because we're protecting the forest already. Well, it was like, well, hang on a bit. Carbon is meant to address immediate or imminent threats. That's what carbon finance is meant to do. But that's not to say that folks in indigenous communities and other places around the world who have been doing the right thing should be able to, capture some of the value to continue to support and strengthen their communities. And so I think this is where we're working with a consortium of folks, including Conservation International, to kind of bring together the thinking on biodiversity crediting per se. I'm not sure it'll be a credit as we know it, at least in the carbon world, but a way to drive finance for nature and biodiversity, and recognize the efforts of communities that have actually been doing the right thing. So I think that there's early stages, but there's a lot to be written in this particular chapter. It may not necessarily be a carbon finance mechanism, and it could, maybe a broader climate finance, but nature financing as well, which I think is really exciting. And we're finally starting to see enough players come to the table, because people have been trying this biodiversity crediting. And then in one conversation I had, so is there going to be like a lookup table where you can compare the biodiversity in one region versus the other? And the answer is no, we're not going to get there. That's impossible, right? But you've got to be able to make some sort of claim around the fact that what you're doing is helping to conserve and protect biodiversity or nature in the long term. So I'm actually very excited about that.
Mm-hmm. Yeah, and I mean, countries like the US have had prototypes of biodiversity markets in wetland mitigation banking and biodiversity mitigation banking, and other countries have set up biodiversity banks. So we've been playing around this and dancing around this for a while. I think it's just harder in many ways because carbon and climate have a natural commodity, which is a ton of a CER what am I looking for? It's the equivalent, CO2e, carbon dioxide equivalent. Biodiversity is by its very nature an anti-commodity. Its value, it's its diversity, right? Commodities are valued because they are consistent, like corn yellow number 5 or Brent crude. But I think we'll find ways. It's just going to be much more localized and geographically much more bounded, I think, than carbon, because you're not going to allow trading snow leopards for tigers or tigers for red cockaded woodpeckers. So, there's going to be some limitations on that. I think it'll be harder, but there's movement already. I do think that we are seeing a merger of these two markets in the nature-based solutions aspect of this, where people are talking about, well, how do we do carbon in a way that also impacts biodiversity communities and other things? And Verra and others have had the climate community and biodiversity add-ons to their standards. So, it's something we have been looking at for a while. Pedro, did you raise your hand? Yeah.
Yeah, no, it's interesting what you're talking about, the trading of the tiger versus whatever, the elephant. I mean, they are non-fungible commodities, right? And it is only, the comment is only valid if you want to emit an elephant, so you buy you buy a tiger. But it's interesting that the flurry of demand that arose now for the voluntary carbon markets, is it really going? Are people looking for permission to emit through the offsets, or are these emission reductions that have been bought part of a reduction trajectory that it was committed through the SBTIs of the world? If that's the case, so yeah, I have an impact on biodiversity. I want to, it's not that I want to compensate, but I want to contribute to biodiversity conservation somewhere in the world, and it doesn't need to be fungible. And I think that the example of the VCM at the moment should be used for us to try to promote other markets as well. We never managed to make biodiversity so attractive as carbon, but voluntary carbon markets should be the same as voluntary biodiversity conservation. And I think there's a trick there to be learned. I mean, I know timer like you, Ricardo, that have been in this ecosystem marketplaces for so long. Perhaps we should think more about that.
Yeah, and we have been thinking a lot about it and trying to address it over the many years, right? And in a way, people are quote unquote emitting or destroying a red cockaded woodpecker, and you can't offset that with some other species because it should be a red cockaded woodpecker. So there are some issues there that around this, but I think there's also a lot that we can learn from how the carbon markets have evolved in terms of standards, in terms of structures, in terms of trading, in terms of additionality, in terms of all these things that we talk about constantly in the carbon markets. There are analogs for the biodiversity markets out there. So we've come to the end of the allotted time, and I apologize for all the questions we didn't get answered. We did our best, and somebody said this should have been 3 hours. I agree. It was amazing to hear you all the OGs of the carbon market thinking about where we've been and where we're headed. So I really, really appreciate you taking the time to do this. And I think we need more of this kind of thinking, and we need more of this kind of thinking that both brings the historical perspective, but also brings kind of like, what is going on? What's new? What's the, what do the new technologies enable us to do? So I think us OGs of carbon, who, as Pedro says, have been at it since the early 90s, need to accept some of the young Turks bashing the gates of the carbon market and learn from them and take some of these things that are happening and moving them forward. And hopefully we can do more of these. But thank you all for your service to carbon markets. We wouldn't be here without all of the contributions that you guys have all done in these markets. And thank you for taking the time for doing this. And hopefully we can do it again sometime. So let's bring the band back together again, once again, for
Well,
another one.
I think we'll need to bring in some new players too, right? Get the Web3 guys in here as well, because I
Yeah.
think that would be a very useful conversation with them in the room. But thank you, Ricardo, and thanks to Talo again.
Thanks,
Yeah.
everyone.
Thanks so much.